All right. Well, Atul Suri is with us. He's CEO at Marathon Trends PMS. He's with us here in our studios. And who else to ask about where we are headed? Atul, good morning. Good to have you with us here. You know, technicians buy strength, and this is a very strong market by any yardstick, by any measure.
Sure.
So the natural course of action, one of the least resistance is, buy this. Low or higher is buy this.
No, I think I've been saying this for a while, and of course we've had some hiccups in March or so, and I think thanks to the Adani thing, also India had outperformed globally a lot. So things are getting repaired globally, Prashant. It's not just India. You know, we look at the US, the S&P 500 is kind of stuck. I think it's doing a time-wise correction. But you look at markets in Europe. You know, when have European markets been the leaders? You'll find a lot of them, Germany, France, some of the Spanish markets breaking out to 52-week highs. Japan is at 52-week highs. So there's a lot of global repair in equity markets happening. And of course, India has been, was a big outperformer last year. You know, when they were making 52-week highs, we were making lifetime highs, if you remember, November. It was overdone. We have corrected. But I do think that India is again having another push-up. If you look at the internals of the market, okay, you may say Nifty is 3% from there, which is nothing, actually, which is really nothing. The bank Nifty, I mean, the most important, the biggest elephant in the room, it's almost there. If you look at the auto index, when you look at the way auto stocks are, if you look at FMCG, that's doing very well. The PSUs have been doing very well. So what you'll realize is that a lot of components are kind of breaking out or giving advanced breakouts. You look at the mid-cap Nifty 500. You know, it's not just a large cap, it's not just FI driven. So you'll find that there is overall repair, and the best part is there's no euphoria. People are still sitting in cash. So it's very important that when you break out, you shouldn't be overextended. You shouldn't be people are going all over, falling over each other, leverage. In fact, people are sitting in cash. And that really gives you a sense that when breakouts happen, the move beyond the breakouts are large.
That's the only point where I don't know how to read it, because gradually, I mean, I've written it down, what percentage of people I speak to were bullish at what points in time. But now when I speak to people, 70-80% are they bullish. I mean, there's no euphoria, but people are bullish.
How many have borrowed money to invest in equity?
I'm not asked, I will ask.
So the fact is
that there is euphoria, which is not there.
There is no borrowing. You know, people have cash in the bank, and still you find this FD versus equity kind of things, you know. So you know that things are not really. And important thing is that when do tops happen? When do bubbles bust? It is at peak leverage. Where is the leverage in the market? So that clearly tells you that there is a lot more fuel. And when the rocket breaks out, the fuel will take it to another level. That is why I continue to be very bullish on India. Yes, we may have corrections. We may have time-wise corrections. We may have 5% corrections. Nobody knows, right? But the important part is that these are times to really deploy. And that's kind of my thesis. And as I said, it's not just the indexes, Prashant. It is you look at the internals of the market. The look at the number of stocks, I said last time, 52-week high versus 52-week lows. How many stocks are making 52-week high today versus lows? You see.
Yeah. Actually, when he walked into the studio, and his energy was quite palpable, you know. You were talking about the markets, and he was like, Sonia, I told you so, I told you so.
Atul is talking in space terms, rocket, fuel, stratosphere.
So you know where that's going, right?
So at lifetime highs, you know, that's the only, what do we call the blue sky. So when you say blue sky, you have to speak about space.
But, you know, I mean, just to kind of getting a little sanity into the conversation, right? This morning, Lawrence Blanco of CLSA put out a very interesting note, where he said that, because you mentioned global markets, I just want to put that note out. He said that global and regional equity indices are giving conflicting messages. So yes, the S&P 500, NASDAQ, Nikkei remain resilient. But on the other hand, Hong Kong, China markets are, you know, trading at the lower end of their boundaries. And this gives us a view that it's better to manage risk rather than add risk, because the current technical setup warns of a 5 to 10% correction.
For how long or how many times have Chinese market dictated global market trends? Or for that matter, Indian market trends. So I do think that, you know, yes, there may be issues with certain specific geographies, but we've all learned over years that China actually, or Chinese markets behave to their own tune. Ultimately, what matters, like talking about US, you know, this 4,200 on the S&P 500, it's kind of stuck. It's just about there, 41 plus. So I do feel that they are correcting. But the beauty is that the correction is time-wise and not price-wise. Corrections can happen too, like the market can tank massively and then again come up. Or it can just spend time. Even time corrections are very good. In fact, time corrections are more healthy because they frustrate people and all the weaker hands get out. And then the next move that comes is very, very near. So the 4200 breakout, I feel, in S&P 500 will be a very big dramatic shift that will happen in global mood that there is. But again, I flip back to think I would rather put more weightage on Germany, Japan, France, rather than maybe
So
Hong
you
Kong.
don't see a time or price correction coming anytime soon for the Indian market?
No, I think it can come. I think it can come. Remember, we've had a run from March, right? We had hit lows, and we've kind of had a vertical move. So definitely corrections can come, Sonia. But the fact is that as an allocator of capital, as an investor, I've hardly ever seen people time that 5%, 3%. It's good for traders, day traders. But as allocators, betting, waiting for that 3%, 2%, getting stocks. Who knows, the markets may correct 3%, but a lot of the stocks may continue making new highs, So I think that trying to be too cute to get the 3-5% is not. The important part is how are we shaping up? And I think globally markets are shaping up very well. They're repairing the damage that was done last year. And more so is that the internals are really telling me that.
All right. Hi, Atul. Good morning. Atul, when you joined us the last time, you talked about the capital goods space, the engineering goods space as well. Yeah. You said various sectors are looking up. Maybe L&T bounces back after a lost decade. Their numbers were a little bit on the downside. But how do you view this space from here on? And are you still as bullish on the space?
Yeah, so Nigel, my understanding over the years has been that the way our sector indices are constructed, they're very, very, very bunchy. Let's take the PSU index. It's been the only sector index that has been consistently making new highs. But the PSU index has PSU banks, it has defense, it has something to relate it to energy. So what we did at Marathon is we went out and created around 42 bespoke thematic indexes where we classified these themes. So as per that ranking, the biggest trend that is playing out is the electrical equipment space. So net, there are only 10, 12 companies, right? I won't take names for obvious reasons, but the fact is that there are very big trends that are playing out. Because cap goods also is a very big industry. Yeah. What do you find in it? So I think that I'm giving you something very, very specific. We feel that the whole electrical equipment play is really, really working out very good. The second sector where we think there's a very big trend is defense. Again, a subset of the PSU basket, but we don't have a sector, but we have created sectors. We find that defense was a theme that has played out very well last year. And that's the only theme which we feel continues to make new lifetime highs. As a disclaimer, they are both overweight positions in my portfolio. The third theme which I think is playing out very well are hotel stocks. Again, they have done well in the last year. They've consolidated and they've all broken out to new highs. And even the numbers, if you see, they're coming out very, very good. So what I feel is that these three themes are playing out. Fourth is something that may interest Sonia is autos. If you realize that autos also, and more than autos, auto ancillaries. Yeah. So you really need to look at markets more thematically and in a micro way. And we feel that these four sectors are really what's leading things ahead. And they're all at lifetime highs. And that's why I feel that these are actually the leadership thematic or the trends that are playing out.
But for autos, you don't think it's too late to get in? I mean, it's already seen a big rally. Tata Motors is up, 20% this year already?
Yeah, I mean, we are getting happy with 20%. We've forgotten what 200% are. Because, when you look at, I was just discussing with Nimish right now, that very often in these stocks, we haven't seen these sectors perform for a decade. Yeah. Capital goods, engineering, they have a lost decade actually. But if you go back and look back at 2003 to 2008, you'll realize that in that phase, it was a similar themes, similar stocks, similar sectors playing out. And then when you go and look at the price performances, then you'll realize it was not about 20%. It was how many times. So when the whole, industrial cycle turns, or when the whole cap goods or the whole, the investment cycle turns, you'll find that the trends tend to be very elongated. Stocks are expensive, but then they just deliver phenomenal numbers. And suddenly what's very expensive becomes reasonable. And as long as the numbers keep coming, Sonia, you'll realize that the trend keeps playing out.
Actually, Tata Motors has not done anything for 10 years. Maruti is there at 6-year levels. I mean, same levels as 2017 or so.
Right.
Just the broader markets, Atul, small caps. Have you done some work there? Is it looking like that's the place to be over the next couple of years?
Absolutely, absolutely. Because, at this point in time, we are record overweight in small caps because we are a multi-cap fund. And we find that we almost have a 40% allocation to small caps. Wow. And again, in that, Prashant, you'll find the themes that we are talking about are those engineering-related plays, those gap good plays. And you can see it on your screen also. You mentioned a couple of stocks. You see the kind of numbers that are coming out. They are phenomenal. So overall, when you will look at Nifty numbers, you will say, okay, it's as per expectation, beat little. But in some spaces or in some pockets, the kind of numbers being delivered are phenomenal. So I do think that there's a very big bull market playing out. There is more in the mid to small cap space. And it's more into these, capital goods, engineering, unloved, as you said, a decadal underperformers. But I think there's a very big shift that is happening there. Even if you look at the US markets, they have a theme called industrials. When was the last time industrials did well? But you go and look at industrials play out. If you look at it as a generic term, we call them as industrials. You see the way industrials are performing. So it's going to take a mental shift because we are so used to, the tech and, all that kind of play. We forget that even this can be a growth space. And I do think that's going to play out.
All right, we'll leave it there, Atul. Thank you very much for joining us.
Thanks for having
me. It's a pleasure having
you
with us.
Actually, I just had one question before we let Atul go. I mean, just coming back, because, this market is in such a good mood. And if you look at it, give and take everything, it's not even a 1% rally this year, right? The Nifty has gained, 1.5% in 2023
So why do you
far?
look at it in 1 year? Let's take it at 5 years. Let's take it at 10 years. So the fact is that, it's like that same, that fixed deposit versus equities. Yeah. I think that's very unfair when you look at it from a 1 year point of view. But you need to stretch it. Yeah, if you look at it from 1 year, it's disappointing. But the fact is that when we come into equities, it's about 3 years, 5 years. You'll find that as an asset class, as a market, I mean, there's been nothing better as phenomenal as India. So it's about time, Sonia. Statistics can give you any output you want. It's just that you need to go and torture them enough. So if you torture them for 1 year, it's going to tell you what you want to hear.
All right, before we wind this down, what about crude?
I think that's one of the best things that's happening. In fact, the sector that outperformed globally asset class in 2022 was commodities. And if you look at year to date, commodities is the worst performing. In fact, 23 is actually kind of a flip on 22. The best performing sector was crude. It's the worst performing. The worst performing asset class was Bitcoin.
It's the best performing.
It's the best performing. So 23 is actually emerging as an opposite. And I do think that crude is headed lower. I have a target of 65. But obviously, it's not a straight line. Hopefully, we'll get there and it's positive for India.
Okay, Atul, thanks a lot for joining
Thank
in.
you.
It's always great speaking with you.
Thank you
and
very much.
Great having you here in the studio.
See
Hopefully, the next time we meet, the markets will be at all-time highs and more.
It'll get there. It'll get there.
It's just a matter of when and not if, right? That the market hits new highs. All right. Thanks a lot for staying with us. But let's